Hello everyone. I want to cover, one of the things that we'll cover in chapter 4 is cash. And up until now we've just been calling cash cash. We haven't really looked at the intricacies of what it makes it up. One of the things that helps you determine how much goes on the cash line for a bank a balance sheet is reconciling your bank account. What I want to do is take you through the easy side first, and then I'll take you through the more difficult side. If you do the easy side first, it will give you a check figure, and you can use that check figure to try to figure out what's going on the other end. So when you look at this, I want you to split this in half. Okay, so when you look at this, there's the books side and there's the bank side. So this basically, this bank rec is really bisected in two, and both these two numbers are going to match. Okay, the easy side is the bank side. Let's go ahead and take the bank side. The bank side, as you read this, remember to read the last sentence first. It says, prepare a bank rec to determine how much cash Ranger actually has. October 31st. There's going to be two versions of the truth of how much cash Ranger has. One version of the truth is what the bank says is in the bank account, and that's incorrect. Another version of the truth as to how much is in the truly owned in terms of cash is how much the books say there is in cash. So if you look at the general journal and you're looking at all the cash entries, at the very end you'll have, this is what the books say we have in cash, and that is also incorrect, which we'll illustrate here in a minute. So reconciling is the process of truing up what cash actually is. Let's start with the easy part first. The bank side, the balance October 31st, right? This is at the end of the cycle. The October 31st, what does the bank say we have? Well, we look here, the cash account of Ranger Corporation, blah, 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 that's not what the bank says we have. Included were outstanding checks totaling $900, and again, we're hunting for what does the bank say we have. The bank statement, which came from the bank, unsurprisingly, listed a balance of $44.48. Okay, this is our first anchor number. And that's how much the bank says we have. Now, there's things that the bank statement could not possibly know, right? There's things that the bank statement could not possibly know because there's things that happen too late in the cycle. So as we go through the month, let's assume we're going left to right, left to right. Let's say the cutoff is here. As you're going left to right, left to right, left to right, at some point the bank cuts off and says, okay, this is everything we've received, this is everything that we've paid out. Well, obviously, there can be checks that the company has written that have not cleared yet. In other words, they're coming, but they haven't cleared yet. When they clear, that bank balance will go down. And then deposits in transit are deposits that, again, the bank could not possibly know are going to hit yet, because that's what in transit means. It means they've been basically put into a box or put into some kind of deposit type mechanism, but this bank has not seen them hit yet, and that's why they're in transit. So there's money coming into the account after this cutoff, and there's money leaving the account after this cutoff that just the bank doesn't know about yet. Well, one of those categories is deposits in transit. The bank cannot possibly know that you have stuck a check that's being deposited at the very last minute, because what happens is the bank runs their system and that check still hasn't cleared. That deposit still has not made the bank statement. Well, what you're looking for then is the deposit in transit here. So it clearly says October 31st deposit of $400 did not appear on the bank statement. Well, it didn't appear on the bank statement because it's a deposit in transit. Here you have kind of a little quickie total now. It's 48.48. That just shows the amount here, total of 48.48. That's on the plus side. On the minus side, the bank statement could not possibly know that you just wrote a check and handed it to someone, because you wrote the check, handed it across the table, the person put it in their pocket. It's going to clear. It's going to drop this balance. But the thing is, it hasn't hit the bank yet. So that's something that you have to true up. If you look here, it says outstanding checks were $900. And we look for outstanding checks. And you'll notice here the math is pretty simple, because we got the 48.48 minus the 900, and we come up with 39.48. This is the easy side, the easier side of the bank reconciliation. So this has to equal 39.48. Okay, whatever's going to happen up here, we got to start. We got to end with 39.48. This, of course, presumes that you've done this right. Notice there's not as much complexity on this side. It's basically adding the deposits in transit, subtracting the outstanding checks. Let's go over now to this side. So let's start with what the books say cash is. Well, the books say that the cash account of Ranger Corporation reported a balance of $34.78. So it's $34.70. So there's your beginning amount. And we're going to go through a similar process here of what this time, instead of saying what is it the bank statement could not possibly know is coming, it doesn't know these deposits and transits are going to hit. It doesn't know that these outstanding checks are going to hit. On the book side, we're asking the same question, but we're focusing on what could the books not know is coming, is going to hit, because the books just don't know about it yet. Outstanding checks and deposits in transit, the book knows about those, because the books, when these checks were written and when these deposits were put into the system, the book balance was adjusted. That's why it says it did not appear on the bank statement. Well, that just means the bank statement doesn't know about it. The bank statement, which came in at $44.48, we put that there, we know that. Included in the bank balance was an October 30th collection of $511 on account from a customer who pays the bank directly. Well, if we have a customer that pays the bank directly, okay, that means it's here. It's in the cash bank statement, but where it's missing from is the books. In other words, this did not get an opportunity to go into the books. So that's the whole thing. The key thing here, who pays the bank directly. That means they pay them behind the books back. So books have to adjust for that. So we put $511, and this is a bank collection. This is something the bank collects for us and then tells us on the bank statement, hey, we collected $511 for you, directly paid to us. You don't know about it until you looked at the statement. The bank statement also shows a service charge. I want to skip this for a minute. Service charge of $20 of interest revenue. Well, interest revenue, the only time that Ranger's books know how much interest has been earned at the bank is when the bank statement comes in. Okay, so this is something that the books do not know how much interest we're going to earn until we get the bank statement. We get the bank statement, we make an entry for it, we debit cash, we credit interest revenue, but that doesn't mean the books don't know about it. You have to make that entry. So let's go ahead and add that. Let's add our interest revenue. And interest revenue of 20. Okay, that will bring us to, let me do some math real quick. 3470 plus 511 plus 20. That gives us 4,001. Now let's look at the things that, these are the things that the books could not possibly know should be added to the books, and really became aware of it when you got the bank statement. There's also charges that the books did not know about until the bank statement comes, and it says here clearly the bank statement shows a service charge of $13. So we're going to have to drop this $13. And that's going to be a service charge. Okay, so going back for a second here, we started with 3470, which is what's on the books, and then we're adding what the books could not possibly know. The books don't know until they see the bank statement that 511 was collected on account. The books don't know what interest revenue is until the bank statement's looked at that says, hey, you got $20 of interest revenue. And then minus, there's things that the books could not possibly know about. One of them is service charge, when it actually tells you, hey, you're being charged $13 by the bank. And the other thing that the books could not possibly know about is that a check that they have collected has gone bad. In other words, a check that was paid to Ranger has gone back. That's the definition of an NSF check. The bank tells you, hey, you have non-sufficient funds. You have non-sufficient funds you got a check that we received on your behalf, and when we tried to cash it and put it into your account, it went bad. So that means that this balance, the $34.70, artificially has $40 in it that really should not be in there. If the check had cleared and it was good and the party who paid us had the funds, it'd be okay. But the bank is telling us, hey, there's a $40 check that went bad. So this has to drop for that. So let's put NSF check and drop it $40. Now, don't just take it for granted. Go ahead and be sure you do the math. If you take the $34.70 you add the 511 and the 20, you get 4,001. And then if you take 4,001 minus 13 minus 40, you get 3948. And that's how you do a bank rec. Notice again that there's an easy side and a hard side. This left side is easier. It has less kind of nuts and bolts in it. It has kind of what the bank statement shows is in cash. Then it adds what the bank could not possibly know, because it doesn't know that you've got a deposit that you've stuck in the mail or whatever and it hasn't cleared yet. And it doesn't know that there's checks. In other words, right before the cutoff of the bank statement, you can write a ton of checks to someone, and they eventually will drop this balance, but because of just because of the timing of the check, that causes it to go out. The other side, you start with what the books say is truly the cash amount. You add what the books could not possibly know. The books don't know until they see the bank statement that the bank collected $511 behind your back, and that's okay. That's an agreement that was put in place. You're just being let know. They're letting you know once a month how much was collected on your behalf. You don't know about interest revenue until you look at the bank statement. You don't know about service charge until you look at the bank statement. And then an NSF check is a check that the bank is letting you know, hey, somebody wrote you a check, put it into your account, you deposit in your account, and when we tried to clear it against the other bank, it went bad, so they didn't have enough funds. And this is how you work it. Work the easy side first, and then work the harder side, and be sure and get your check figure. That will help you. Write this down, if you have confidence, if you get this side down, if you have confidence that this truly is what cash should be, and this is off, take the difference. Take the difference between this, and that difference will give you some clues as to what you failed to take into account. I hope this was useful.